With that being said, we've got Ben Older with Older, Lundy, and Alvarez, Family Law and Personal Injury. You can find them at www.olaw.com. I'm going to have Ben kind of chime in here and tell us a little bit about himself. So, Ben, welcome to the show.
Hey, Scott, thanks for having me. I really appreciate it. Are we going to talk about divorce and mortgages, or are we going to talk about physical fitness? Because either one I'm fine with.
We could talk about physical fitness probably all day long. Nobody likes talking about their workouts and what they do more than CrossFitters. Right, I'm sure you've seen all the silly things on Facebook. CrossFitters love to tell you about their workouts. But today we're going to skip that. We're going to talk about divorce and law. We're going to talk about the mortgage process, real estate involved in divorce. But first, tell us about you.
All right. My name is Benjamin Older. I go by Ben. I'm an attorney, and I'm one of the founding partners of Older, Lundy, and Alvarez, attorneys at law. We handle marital and family issues, personal injury issues largely. I've been doing this since 2003. My particular area of practice has been marital and family law for the majority of my tenure as a practicing attorney in Tampa. We have about 9 lawyers, I think it's up to 9 now, that do only marital and family law, which is uncommon in the state. It's usually a much smaller group, but we're fairly large, and we handle all level of cases, giant multi-millionaire cases, small modifications, and everything in between. So that's really the basis of who we are and what we do, what I do.
Great. That's fantastic. So if somebody is unfortunately going through a divorce or thinking about going through a divorce, whether they be a millionaire or just a local guy, that works maybe, a blue-collar job, you can help them at your firm.
Correct. For the purposes of today's topic, and when it comes to real estate, the only time it's going to be relevant is going to be in a divorce case. But as a family law practice, we do handle paternity issues, child custody issues, and the like. But you're never going to have those issues per se related to real estate, because we're going to talk about equitable distribution in a minute, but really in divorce is when you're going to see the real estate issues become salient.
Gotcha. And we'll talk about that in a minute, but just so I understand it, so the people out there understand, for somebody that maybe they're not married, but there's a children involved,
correct?
So you can help them with those type of issues as well.
Absolutely.
Okay, good. That's good to know. So let's talk a little bit about, listen, unfortunately, we know that probably 50% or more of the people out there that are married are probably going to end up divorced. That's kind of, the statistics I see are 54% of marriages end up in divorce.
That's what they say.
So they say, whoever they are.
Whoever the they is.
Right. A lot of times when you're going through divorce, there's real estate involved. When you have a piece of real estate, most people have a mortgage on that. A lot of people pay cash these days, but, a lot of times there's a mortgage involved. So my question to you is, what happens to real estate during a pending divorce?
Okay. Well, it's a fairly short answer to that, but a lot of people ask that question, so I definitely wanted to touch on that today. During a divorce, nothing happens with your real estate as a general proposition, as far as liquidating, selling, changing, et cetera, et cetera. Most oftentimes what happens with the real estate is one party stays in the real estate unless the parties are not can get along. In which case, if they can get along, they can stay in the house together. If they can't get along, usually one person moves out, and we'll touch on this too, I believe, is that person will typically not purchase another piece of real estate. Will usually rent something in the interim. The person that stays in the property, there will be some arrangement as to how, if there's a mortgage, how it will be covered, how the home expenses will be covered, how the anything related to maintenance, et cetera, will be covered during the pendency. And as a general rule, the courts frown on anything, any modification to the real estate holdings during the pendency, because it just complicates things at the end of the case. The caveat to that is the parties are free to stipulate to do anything they want. So one of the things that I see a lot of time in cases where the house is going to go, meaning it's going to be liquidated because it could be mandatory given their financial situation, or it could just be that the parties are like, look, I don't want to keep this house. We don't want to keep this house. We're going to liquidate it anyway. So a lot of times the parties will stipulate, and they'll say, tell you what, let's put it on the market. Let's sell it. We don't have to know what we're going to do with the money at the end. let's just sell it. We'll put the money in somebody's trust account. We can either put it in one of the lawyer's trust account, or we can leave it with the title agent, although generally speaking, the escrow agents don't want to touch any of that. They want it out of their – they want to take their money and leave.
Right.
But typically what will happen, and I have this going on in a few cases right now, is once the house sells, all the money, the net money, will go to one lawyer's trust account, and there'll be an agreement that says that money just sits there untouched until further order of the court or further agreement by the parties.
Right.
So that's one scenario. The other scenario is during a dissolution of marriage, if one of the parties feels that the house should be liquidated and the other party doesn't want to liquidate it, you can go and petition the court to have either the house sold during the pendency and ask for the money to be put into an escrow account and ask the court to order it, or you can do something which is similar, which is called a partial interim distribution, whereby you go to the court and you say, court, judge, please sell this property and actually distribute the money to the parties to be used in any way they see fit, so to speak, meaning we don't want to wait till later. I want my money now, and give that other person their money as well. So those are really the general scenarios.
All right. And listen, I'm a mortgage banker, right? So my mentality is, I would love to see everybody, one person keep the house and come to me and refinance, right? That's my perfect world. But I'll be honest with you. I think probably the smart move in most divorce situations is to liquidate the property. You have to ask that question when you're going through divorce. If I were single, which you're going to be real soon, would you buy that house?
Right.
Right. I know in my situation, the house that I live in right now, if, God forbid, after 17 years...
Never going to happen.
After 17 years of wedded bliss.
You listening, honey? Never going to happen.
My wife decided to finally get rid of my knucklehead self. The house that we live in now, although I love it, I love our neighborhood, I love our community, as a single guy, that's not where I'd want to be, right? Mm-hmm. So you got to ask that question yourself. So, that kind of leads me to a question. And I think I know the answer to this, but I'm interested in your take on it. Can somebody buy or sell real estate during their divorce?
The technical answer is yes.
Okay.
But the smart answer is no. I mean, when you're in the middle of a divorce situation, whether or not you're getting along and you're working towards a settlement, or whether or not, or you're in active litigation and, it's the War of the Roses, so to speak, it really just muddies the water to add any sort of significant addition to the portfolio. Okay. Now I could get into the technicalities as to why you can or why you can't, or where you draw a line in the sand for what becomes a marital versus a non-marital asset. I'm going to skip all that for a minute, and I'm just going to say this: there are very blurry lines with respect to whose money is whose during the dissolution process, right? Because it's going to get divided at some point, but there's question marks about how it's going to happen. And if it hasn't happened yet, money's got to come from somewhere. I mean, in your first segment, you're talking about sourcing funds, right? And where the money's going to come from and where it is. Well, it's a similar issue. Where did the money come to put the down payment on this property? So you could end up in the untenable situation of, hey, I've got this new property. Now I'm locked into a 30-year fixed or a 15-year or variable, whatever the product is. And now I got to account to my soon-to-be ex-spouse about it. It's a problem.
Yeah.
All right. So you really want to avoid that. That's why I tell all my clients, and it happens. They say it's a great deal. They want to do the deal. They got to do it right now. It's the best thing ever. It's 1.2%, and I say I don't care what the deal is. Right. Just suck it up. Rent someplace for now. Don't muddy the waters. You'll have plenty of opportunities later, and I can find a guy like you or you in particular to help hook them up when it's time.
Right. And I get these scenarios that come to me. I deal with a lot of clients. I have these scenarios come to me all the time, and I'll take people through the application process. And when I hear that I'm going through a divorce, and somebody saying, "Well, I want to get I'm in the process of going through a divorce." At that point, I have to stop and really explain to that person or have a conversation with them. They need to really understand in the state of Florida, where what's considered a spousal state, you technically cannot purchase an owner-occupied piece of property in the state of Florida without your spouse
on the mortgage.
Yeah. You have to. So the question becomes, you're going through a divorce. Like you said, do you want to muddy the waters?
Mm-hmm.
Trust me, I make money closing loans, and I want to do, mortgage transactions. but I'm not going to put somebody into a bad situation.
Right.
And, it's, that's exact scenario. Well, I found this house. I love this place. It's such a great deal. I understand. It's a great deal. There'll be another great deal 6 months from now or 3 months from now. And I understand these mortgages. I mean, I'm sure you see it all the time. I've never been involved in a divorce. They could take a long time.
Mm-hmm. Yeah, of course.
So, it can be a little bit frustrating. I've got a friend that's going through a similar scenario. He's calling me about these properties all the time, and I have to keep telling him, hey, you're not divorced yet.
Stop looking at properties.
Stop. It's exactly.
And you'll stop finding properties.
He's working with a realtor that I'm a good friend with. I'm
Right.
doing his mortgage. I've known the guy for a long time. I'm like, stop. You're going to drive yourself crazy. Stop looking at real estate. Stop thinking. Go rent for a little while. They finally got they're selling the marital house. They're going to split the assets,
Right.
or however the court's deciding they're going to split the assets. You go rent for a while. When your divorce is final, come talk to me.
Right.
Let's slow down. Let's slow down. So, kind of back to that topic. What when you're calculating marital or non-marital interest of real estate for divorce, how does that work?
All right, so we're talking about at the end of a case when we're coming to either a final settlement or a final adjudication by a judge. Is that what you're talking about?
Yeah.
Okay.
We're getting to the end now.
All right, we're getting to the end. And again, this can either be pursuant to a settlement, the parties are agreeing upon something, or that a judge makes their agreement for them. And I use that term tongue-in-cheek because judges don't make agreements for you. Judges tell you what's going to go down, and that's the way it's going to go down. So let me wax poetic for one brief moment and just say that if you're involved in a divorce litigation and you can find your way to make an agreement that you may not love but you can live with, you're better off making that deal than letting a judge who doesn't know you, doesn't know your kids, doesn't know your personal situation, has only a few hours, whether it's 3 days of a few hours or 4 hours in a row, to learn your situation and rule about how the rest of your life is going to be.
Makes sense.
Okay, so I just want to say that, get it out there, because it's, everyone wants to, they come to my office wanting to win, and the first thing I tell them is there's no winning. There's only getting through it. And I make my money litigating, right?
Right.
The more fighting there is, the better I do. But just like you said about wanting to sell mortgages, I would rather my clients keep their money, put it towards their kids, put it towards their retirement, and get through the process quicker and less painlessly than spend it all on a bunch of litigation and end up where they're going to be. Not to say I'm not equipped to do it, because we do it all day long, but just as my what I hope is sage advice to all my clients is try to find a resolution. So with that said, everything I'm about to say is either pursuant to an agreement or court order. Okay?
Okay.
All right. There are two types of definitions for a piece of real estate. And by the way, this goes for any sort of tangible asset in a dissolution. But we're going to just talk about real estate.
Okay.
There is a premarital asset, okay, which is also called sometimes a non-marital asset. And then there is a marital asset, okay? And now how that is defined with respect to real estate is if one of the parties owned the home prior to the marriage, that is a non-marital / premarital asset. Now, why does that matter? Well, like you said, especially in your world and the world we live in, most people are on a mortgage. Or on a note, I should say.
Yeah, the note's
right?
the promise to pay.
The note's the promise to pay. We colloquially, many people call it the mortgage, but we all know we're referring to the note. Okay. They're paying on this note. Well, let's say they buy the house. I actually have this exact scenario. They buy the house a week before they get married, and one party buys it in their own name and keeps it in their own name. It's still non-marital. It doesn't matter if it was bought 10 years before, okay? Just so you know. But somebody buys it. It has a certain amount of value at the date of the marriage, but it was purchased before the marriage by one of the parties. During the marriage, they don't refi, they don't do quitclaim deed, they don't change the titling of the property. It stays exactly the same, but now they're paying on the mortgage. Well, once you get married, the dollars that you pay, I should say the dollars that you earn during the marriage, become marital dollars. So I get married, I own the house. I never change the character of the house, so to speak. I never retitle it, etc. I start earning dollars in the marriage. 50 cents on every dollar is my wife's dollar.
Gotcha.
So every dollar I put into the into the note, if you will, every dollar I put into the note is half her dollar.
Yeah.
So the way the law treats that is they say, look, you can't ever, pursuant to a divorce, force the sale of that property. That you can't do. But you must account to the spouse for the appreciation that flows from the active participation in the growth and value of the property, which flows from the dollars that are put in during the marital dollars that are put in during the marriage, and also physical improvements. Like, let's say if you literally with your own two hands go and you build a garage onto it or do the roof, there's also a calculation for that. So the portion that would be attributed to the spouse who doesn't own the property is then the marital interest in the non-marital / premarital property.
I'm tracking you.
Tracking me?
I'm tracking you.
Okay. It can get really dry and annoying. But and I'm watching your eyes, because if you start to roll back in your head and snooze, I'm going to have to change the way I'm explaining.
Okay.
But
No,
so far, you're wide awake. You're wide awake. Hopefully everybody out there is wide awake too, and they're not flipping through the channels. But does that make sense?
It makes sense.
Okay.
It makes sense. So let's say we've made it through the process.
Okay.
We're divorced.
Correct.
What happens to the real estate then?
Okay. Now, the second part of that is the more standard scenario, or more similar, is you buy property during the marriage together. Okay. Generally speaking, without getting into details, it is going to be considered a marital property. The value is going to be divided. Either one spouse wants to buy the other one out and keep the property, okay, or it gets sold. The rub in this scenario is that a judge can order the sale of a marital piece of real estate. So while the judge does not have jurisdiction to order the sale of a non-marital piece, the judge can, if you end up at a final hearing and you guys can't decide what's going to happen, the judge can say, well, I'm putting this house on the courthouse steps. You guys, you want to be idiots about it? You want to settle? Fine. I'm going to sell it. You guys get what you get. And it happens.
Yeah. And the scenarios that we see on the mortgage side, obviously, if there's a sale of real estate, that's fine. Obviously, at that point in time, you take your proceeds from the sale, and if you want to go buy another piece of property, your divorce is final as long as you qualify. Let's hope that there wasn't any negative financial activity that happened during the divorce. Unfortunately, a lot of times when we're going through the application process, when we're dealing with people that have been through a divorce, the reality of it is a lot of time it has a very negative financial impact on you, hurts your credit. It just does bad things. But let's say it doesn't. You sell that piece of property. Now you've got those funds. Obviously, you're through the divorce. You can go buy whatever you want.
Absolutely.
A lot of times we see those scenarios where one spouse does buy out the other spouse or wants to buy out the other spouse, and they make that agreement, and they say, you know what, and it'll typically stated in the marital agreement that one spouse gets the property. Right. Maybe the wife's going to stay there with the children. The husband's paying alimony, child support, whatever the case may be, and that one spouse keeps the property. But that husband that doesn't have the property anymore, even though it states in the divorce that the spouse gets the property, he's still on that mortgage and note. A judge can't take him off of that.
No.
So at that point in time, typically what we see on our end is those settlement agreements state that, okay, other spouse that's keeping the property, now you have a time frame. A lot of times it's 6 months. You have a time frame. You need to refinance that property into your name, removing the other spouse A, from the mortgage and the note, relieving them of their liability to that property so that they can freely go purchase something else, because with that other debt, it may preclude them from qualifying. Now, there is a caveat to that in the mortgage world. If you show me a settlement agreement that says the other spouse got the property, then typically, I don't have to count that mortgage debt against you from an overall debt-to-income standpoint. Most of the lending guidelines make accommodation as long as it's court-ordered that you're no longer responsible for that property. I don't have to count that debt against you. Now, with that being said, just because I don't have to count the debt against you from a debt-to-income standpoint, if the spouse that got the property stops making the payments, those late payments are still going to show up and destroy your credit.
Right.
So you want off of that property.
Of course.
You definitely want off of that property. unfortunately, most divorces are not amicable.
Right.
We know that.
Well, they may not start amicable, but a lot of times people burn out, and they do, and they finally decide, well, I really do want to settle this. And so, I mean, my hope is that they always come to some kind of resolution. But it's interesting you bring that up with respect to the components of a settlement agreement to refinance the property, because I have made a cottage industry of receiving cases from other lawyers that did, or pro se litigants. A pro se litigant is someone that represents themselves, where they come to me and say, well, my settlement agreement says that she's got to sell the house or refinance it. But then it doesn't say what happens if she doesn't.
Well, and back to that, that's the exact scenario that we see a lot of times. So the divorce is final. One spouse comes up and says, hey, I've got to refinance now. My divorce says I've got 6 months to refinance. Well, I think we all know what's happened over the last 7 years in the housing market. It's no secret, right? We saw a real bubble burst, and we saw a decrease in values. Let's say you bought that house in 2004, 2005 at the top of the market. Now you want to refinance it. What if you have negative equity in the house, if you're upside down?
Right.
You can't get blood from a turnip. There may not be an avenue or a way for you to refinance that property. And unfortunately, in that situation, typically both parties are kind of stuck.
Right. And unless the court order provides a mechanism to dispose of the property in the event that the party can't refinance, then you could really have a problem in resolving it. Because I literally got this phone call today from a potential client. I'm calling on my mom's behalf. She got divorced 5 years ago, and they made an agreement that he was going to refi the property. And the bottom line is they can't undo this deal and force the court to say, now you got to sell it, because it just says refinance. So you really got to pay attention to what's in the settlement agreements, because they can be problematic in the future.
Yeah. So listen, we're running out of time today. I'm sure Ben and I could probably go for another full hour.
Let's stay and talk.
Yeah. Well, unfortunately, it doesn't quite work that way.
All right. Fine.
So we're going to have to sign off here in just a few minutes. So, number one, I want to thank Ben with Older, Lundy, and Alvarez Family Law and Personal Injury for coming out and talking to us today. OLA law.com.